to explain the transfer and shifting of cost to another process, I am going to make a table that consists of beginning inventory, direct material, direct labor, overhead applied, in rows these heads will come, and in column side grinding department, mixing department, and finished goods department. We will start from grinding department. That our beginning inventory is of 30 rupees, our direct material is of 20 rupees, our direct labor is of 15 rupees, our overhead applied total cost is 40 rupees. So we will write total cost of grinding is equal to 105. As compared to it, now we will write transferring of cost to mixing department. This cost will be transferred to mixing department, where there will be further processes on product there, like they have also a beginning inventory of 15 rupees, direct material of 10 rupees, direct labor of 15 rupees, overheads that incurred on the product or on the product is 40 rupees. So after this we will write total cost of mixing department. The initial cost we will total 15, 25, 40, 40 plus 40, 80, 80 plus 105. This is the concept. Like the units that we have transferred from the grinding department to the mixing department, we will include their cost, and the cost of mixing department we will get the total cost in the mixing department will be 185. Then if we say there are some finished goods already there that was placing there, like of 130 rupees cost finished goods were there. Now we will transfer this cost to the transferring of costs to finished goods 185. So our total cost will become total costs will become 130 plus 180, it will be at 315. So this is the total cost that is we are going to absorb from the grinding department, then we will move to mixing department, and then mixing department to finished goods. The cost is sum up, or so the cost is absorbed in step by step processes. As compared to it, if we say what we did in job order costing, we added all the costs in single pattern, like we wrote jobs numbers here, material, labor, overheads, indirect materials, indirect labors, and all type of cost we have added in job order costing and created one cost. There will be no difference, or there will be no addition of costs of processing departments or their jobs. We will not absorb the job costs into each other, but in process operations or in process accounting, we will absorb previous process department cost to next process department cost. This is the difference. Then comes the concepts of accountings for materials, for labors, for overheads. So first of all, we will discuss accounting for materials. First of all, as you all know, we will do purchase of raw material. The entry will come raw material inventory debit and account payable credit. This is the first entry everywhere. As you know, raw material purchase, we will perform this entry. Now then come how we will distribute our material costs to the grinding and mixing department. The pattern is same like job order costing that we wrote in job order costing, that goods in process, inventory debit and raw material inventory credit. But the difference in this entry will come, we will deal with two types of goods in process inventories. We will debit two type of goods in process inventory. One is from grinding department and second will be from mixing department. In easy words, if the total raw material of 50 rupees is utilized and in our previous calculation sheet it is reflected that 30 rupees raw material was utilized from the beginning inventory as direct material, 20 rupees, and 10 rupees material from the mixing department raw material. This is the sheet we have already made. We will make here, we will include these costs in it, like 20 rupees in the grinding department and 10 rupees from the mixing department. Our total raw material inventory that is utilized is 30 rupees. So this is the entry to deal with the materials. We will only glamorate their heads, that this goods in process inventory is grinding department, this goods in process inventory is of mixing department. Then comes accounting for labors. Here the first entry will be same, like we have paid payrolls, factory payrolls, as we are dealing with production, factory payrolls debit and cash credit. This is the first entry, as we are paying the wages and payrolls to the factory labors. Now again, how we will deal with the payrolls of labors? As you all know, in process department labor is different and in mixing department the labor is different. We will pass entry goods in process inventory in the grinding department, goods in process inventory in mixing department debit, and we will credit the factory payroll. Now again we will see our sheet, how much labor of grinding department was, that was 15 rupees, and the labor from the mixing department was 15 rupees. So our entry will become 15 rupees debit, 15 rupees debit, and total payroll of 30 rupees credit. So this is our entry to deal with the accounting for labors. Then comes accounting for manufacturing oblique factory overheads. Here there are three types of methods are there. No, only two types of method. First one is direct method, that we will include all type of indirect material, indirect labor and other manufacturing overheads. We will total them and we will write factory overhead to the debit side, and we will write indirect material, indirect labor, factory utilities, prepaid insurance related to factory. We write factory prepaid insurance, and accumulated depreciation of factory machinery on the credit side. Like all type of factory overheads, we will add them and we will pass the entry factory overhead debit, and these type of heads we will do at credit side. Now to deal with this, how we will transfer this to goods in process inventory, the procedure will be the same. Like factory overhead credit, and on debit side we will write goods in process grinding, goods in process mixing. These will be debited. Now what is the question, how we will differentiate it? This overhead applied or this sheet will reflect you okay, how much factory overheads are utilized in grinding department and how much overheads are deal in mixing department, as well as the both departments or both process departments utility bills, their insurances and their machinery depreciation will be different. We will add this. It means to deal with the process department entry, we have to pass two types of entry. One entry of overhead, factory overhead for mixing department, and same type of this inventory for grinding department to calculate their overheads. After calculating these overheads, we will total these two overheads value here, and their individual overheads we will write here. So accounting for manufacturing overheads, we have to deal with the two type of entry, one for the grinding department factory overhead, another is for the mixing department overhead. Then we will add those overheads, we will write here factory overhead credit with the total amount, and we will write their overheads as goods in process inventory grinding debit, goods in process mixing debit.